Assalamu Alaikum everyone, welcome back to the channel. Today we're going to look at Microsoft. The company reported the highest revenue it's seen since 2018, but the stock is actually down about 3%. So they've reported their highest, so the biggest revenue growth since 2018, okay, and the stock's down is about 1.5. So I was planning to do this video maybe over the weekend, but I thought, you know what, let me see what if I've missed something, because what I've seen last night, I thought that was perfect in terms of their report. So that's what we're going to do. So that's the first thing we're going to do is just to look at their financials and see what they've reported. So if you go to the company's website and go to investor relations, you will find everything in there. So as you can see in here, basically when it comes to the revenue, it's up about 19%. The operating income is about 31%. You've got a lot of information here that you can just click and go through, but I'm just going to go straight to the financials and show you exactly what they've reported. So towards the end of the video, I'm going to show you basically what I think. I'm going to tell you exactly what I think about all of this. I'm going to tell you what my plans are for this company. And at the same time, I'm going to show you what the analysis, the analysts are saying at the moment, whether it's a buy or hold or whatever, overvalued, undervalued, that's all that side of things. So the first thing we're going to look at is income statement. And if you look at this section, income statement, so basically 3 months, so 3 months prior 3 months, their product is basically they've generated almost $16.9 billion just on the product. Services and others is about $24.8 billion. Total revenue comes $41.7 billion. Okay, so that's just this last 3 months. Last 9 months, on the other hand, is $52 billion on the product, 69.8 on the services, total of 120 or 100, almost $122 billion, just basically from the revenue. Then you look at the cost of revenue. Okay, so how much they've spent in order to produce this. So products, they actually spent $4.2 billion to actually generate $16.8 billion. And again, that is huge margin. That is massive. Okay, just to spend about $4.2 billion to make $16.8 billion. Now they spent about $8.7 billion to make $24.8 billion. Okay, which then gives them total cost of the revenue, which is about $13 billion. Okay, again, that's insane. Trust me, that's absolutely crazy. You will never see. I think when it comes to technology companies, this is the good thing about them. They actually have a higher margins in comparison to like your consumer staples and consumer discretionary. They have really higher margins. Okay, and this shows you by just spending about $4.8 billion, $4.2 billion to make $16.8 billion. That's ridiculous. That's amazing. That's what you want to see, basically. That's what I call a growth company. So the other expenses include, for example, the research and development. So you can see from the prior quarters, basically they are still slightly up, which is absolutely good. Okay, research and development, you want this type of company to actually innovate and come up with new products. Okay, and that's obviously fine. They can spend as much as they want to, as long as they are obviously profitable and that adds value to the company. The sales and marketing, they spent about $5 billion. So $5 billion on the research and development, just over $5 billion on sales and marketing, and then general and administrative is about $1.3 billion. That's basically what they spent on so far, which then gives them operating income of $17 billion. Okay, then overall, when you look at the net income, okay, it's about $15.4 billion. And when you look at the last 9 months, that's $44.8 billion. Okay, again, really, really good to see. And the one other thing I want to actually mention quickly is basically, and we'll talk about this later, is the share buyback. And I will talk about that a bit more later, and I'll show you what I've seen when I was reading about this last night. All right, so the next thing we're going to look at is the balance sheet. So you can see the assets here. So current assets, so they've got cash and cash equivalents, they've got short-term investment. So overall, that basically gives them $125 billion. Okay, just over that. And then you've got total current asset of $165 billion. So now let's have a look at their total liabilities. And this is very important to all of us as investors, because you want to see the company. When you look at the total current assets, basically what you're saying is this company in the next 12 months, do they have enough to pay back if something happens? Can they pay, you know, all their liabilities? And the answer for this company is absolutely yes, because when we look at the total current liabilities is about $72 billion, okay, against $165 billion of total current assets. So they have plenty of money to actually obviously pay if something goes wrong. And the total asset is about $308 billion, okay, in comparison of total liabilities of $174 billion, just over that, okay. So amazing so far. Like basically in terms of current assets, absolutely perfect. In terms of liabilities, okay, and it's actually their liabilities kind of also going down. I'll show you that in later as well. So the next thing we're going to look at there is their cash flow as well. Okay, so they have net cash operating of $22 billion, and this is the bit that I was actually was talking about earlier. So the financing side of things, so they spend on stock repurchases, so they're buying back their own shares, okay, is actually going down. Okay, so they're spending about basically $6.9 billion just to buy back their own shares. Okay, so this is, by the way, this is not the amount of shares they own. Basically, this is how much they're spending to buy back their own basically shares. Okay, so they spent about $20 billion in the last 9 months, $20 billion to buy back their own shares. What that means for us as investors is the fact that if you own one share of this company and they're buying back basically 20 billion worth of shares, then that means the one share that you own is now worth more. Okay, and that is really good. And they spend about $4.2 billion in paying dividend. And the last 12 months, they spent about $12 billion to pay basically as a dividend. Now, they pay new dividend. They are buying back their purchases. They have more current assets than liabilities. Their revenue is basically growing. Their profit margin is amazing. So far, I have not seen one single thing that will mean the stock will have to go down 2.5 whatever. Okay, and we'll see a bit more about this in a second. So what I mean is basically I want to see if there's anything else in here, okay, that is basically so bad that the stock is down basically 2.5%, 3% this today. So the next thing I want to show you is quickly is the segment revenue and operating income. So when you look at their revenue from productivity and business processes, it's about 13.5. Intelligent cloud, it's $15 billion, and more personal computing, and it's about 13. So they're making about $41 billion just basically from these three segments. So these three segments basically are what they report each month. So this includes a lot. This includes basically the Azure company cloud thing. It includes so many different things, and I'll show you in a second what I'm talking about when it comes to this. So even though they've broken it down into this includes, I don't know, 10 different products. That's like another 5-6 products. And then personal computing is obviously a lot as well. And then when you look at the operating income, okay, so from 6 billion, and then another $4.5 billion. So overall total of the operating income from this segment is basically $17 billion. And for the last 9 months, basically, it's about $50.8 billion. And this is what I was talking about when it comes to their section. So they basically, for the last 3 months, this is the older products they have. So office commercial products and cloud services is up 14%. Everything is up. The only thing that's about 5% up is the office consumer products, okay? But the commercial side of it is up a lot. But when it comes to the consumer, which is basically just me and you, then that's basically about 5% up, okay? But everything else is up. But this is what I want you to bring your attention to. The Azure, whatever they call it, Azure, however you pronounce it, that's up about 50% again. And that's their cloud service. That's their basically the main thing. They basically one of the things they've been working on the last few years, and now it's up 50% just like basically this quarter. That's absolutely insane. Like name one other company other than probably Amazon and Apple that will actually generate this type of basically revenues from their cloud services. And the final thing I want to mention is in terms of the balance sheet and so on, is basically the fact that they don't normally report a specific product, okay? but for this reason, basically, when it comes to LinkedIn, they've actually reported they made about $3 billion in ad revenue. So the ads is normally, if you ever go into LinkedIn, the ad is basically for business to business, so people advertising their own business and things like that, and that's up quite a bit. Okay, that's basically 3 billion. They don't normally report that, but obviously they felt like it was important to investors to actually showcase that, which is absolutely great to see. So again, after everything I've just seen and I shared with you, this makes absolutely no sense to me. I mean, this is a great company. The company has been around for a very long time, paying you some sort of a dividend. I think it's less than 1%, but increasing every single year. The product line is amazing. They have so much, going on for the company. They're doing acquisitions as well. They're buying other companies that they like. They're not in trouble with the government as well. You've seen Apple, Facebook, and as well as Google have been in trouble with the government, the US government and the European governments. And obviously Microsoft have absolutely had no issues, and they've been getting contracts from government, contracts from other companies as well, to obviously produce loads of other products for them. So this company has obviously a huge future ahead of itself. And the fact that the stock market basically was down today, I was very, very surprised. One final thing, two more things I want to show you is if you look at the Simply Wall Street, you can see it's undervalued at the moment. But this says $261, but it's currently trading this. So by the time this is updated, I think it will be updated by tonight, this will probably be about 20% undervalued. So the stock is undervalued. Okay, as you've seen basically what the company has reported in terms of these earnings. Okay, everything is up from basically last quarter. I don't see any reason why you should basically invest. I'm not saying I'm not a financial advisor. I'm not advising you to invest in this company. But if you are thinking about this, you own the company already, don't panic because you've seen people selling the company, because there's nothing wrong with their balance sheet. In fact, is probably one of the best balance sheets out there. They have so much cash and they've obviously growing company. So their target price for this basically, or the fair value they're saying, is about $296. And I definitely agree. And I think it will be about, by the time we come to the summer, will probably be about $300+ per share. When you look at the Yahoo Finance also, basically they saying it's a buy at the moment. Okay, definitely a buy, and the average price target is $276. Okay, so it's slightly less than what they predict in the fair value here, but obviously that's a good target. Is basically almost $30 from where it is today, or $20 from where it is today, which is good. It's the upside. So yeah, basically it's undervalued. It's got great balance sheet. I don't see why I would ever sell this company. And finally, I'm just gonna, to be transparent, I'm just want to show you I have 2,750 pounds in this stock. I think I'll own about 15 shares. There we go, 15 shares, and my average is actually $211. Now I started buying this company very long time ago, and I think I've never sold a share of this company. I bought 3 shares, I think not long ago. 3 shares, there we go, for $260 per share. But when I started buying this company, I think it was April of last year. This time last year, this company was trading $176, and that's when I started buying a small every single time. I've never sold a share. I've been buying it since, and I think with this, if this carries on, maybe in the next couple of days, I'm gonna keep an eye on it. If it keeps going down maybe a little bit more, I might just buy maybe 1 or 2 shares. But that's that video. Like I said, I wasn't planning to make this video, but when I saw the stock going down today, I thought, you know what, let me just give you a quick update, just in case someone is basically out there panicking about this and you haven't actually seen the financial side of things, or you haven't seen their report. So I hope that was helpful. If you find this kind of videos helpful, please just like and subscribe. Let me know if you have any questions. Let me know if you own Microsoft and what you think about it. Okay, hopefully we'll do another one, maybe for Apple or any other company that is in my portfolio that's reporting. Maybe in the next couple of days I might look into my portfolio and see the other companies that have reported, and if I see anything interesting, I'll let you know, inshallah. Assalamu Alaikum, take care.